This is Ag Matters PM from the Iowa Agribusiness Radio Network, brought to you by the Iowa Soybean Association, your daily recap of the information that affects Iowa's farmers, producers, and consumers, right here in the heart of the heartland. With reports from our award-winning broadcast team of Dustin Hoffman, Riley Smith, and Mark Magnuson. Now, from the IARN studios in Des Moines, here's Riley Smith.
Good day and welcome to Ag Matters PM from the Iowa Agribusiness Radio Network. I'm Riley Smith. Today is Monday, March 4th of 2024. We're so glad you can join us for today's show. In today's episode, I talk with Dan Halstrom of the U.S. Meat Export Federation along with the rest of the Iowa Ag News headlines. But first, let's take a look at the closing markets.
It's time now for the Ag Matters PM Closing Market Summary, your source for market analysis and settlement prices from the day's trade in Chicago, courtesy of the folks at agmarket.net.
At the end of another trading day in the ag marketplace, we're here with Robin Schmahl of agmarket.net. Robin, what do we see going on in the grain markets today to start off this week?
Well, at least we saw a little bit of strength coming into corn. And I maybe said that before, but it seems like a lot of times once you get into or past the February month where crop insurance price is established, that's a lot of times where you start to see a little bit more buying interest or strength. But the markets held up fairly well, even though export inspections were lower. Corn was at 42.7 million bushels. That was down 8.1 million bushels from last week. It's not a good situation there. Soybeans, 37.5 million bushels, down 1.4 million bushels relative to the previous week. And wheat was 13 million bushels, down 4.7 million bushels from last week. Now, we did have some daily sales today. 110,000 metric tons of corn was sold to Taiwan, and 126,000 metric tons of soybean cake and meal was sent to or sold to an unknown. That's kind of an interesting thing, and because I don't know why they wouldn't know where it went to, but that's beyond me. We just report what's there. So anyway, there was some good sales, so that's positive. Brazil's soybean harvest is now at 46% complete, based on a report from there. Last year it was 43%, so not too much more ahead, but they're moving along pretty good. On the other side, Chevron, they idled 2 biodiesel plants in the U.S. and in the Midwest, basically. And both of them had a combined production of 50 million gallons per year. So they just said the market environment is not conducive for them to continue, at least at this point in time, to produce the biodiesel. So that's again having another little bit of negativity on the biodiesel market and the soybean market. So on the other hand, we did see some divergence in some estimates for Brazilian production, and quite a bit as well. So StoneX, they raised their Brazilian soybean forecast to 151.5 million metric ton. But at the same time, Ag Resource lowered their soybean forecast for Brazil to 143.92 million metric tons. So that's quite a divergence there. Each of them are citing different drynesses and whatever in different areas. So that'll be really keep traders guessing, as we move further along and their harvesting takes place. On the corn side, StoneX lowered their forecast to 124.44 million metric ton, when Ag Resource projected their corn at 114.94 million metric ton. So clearly Ag Resource is a little more negative on production coming out of Brazil, both on corn and soybeans. Now, the interesting thing on the trade standpoint last week is on the Commitment of Traders report. It showed funds covering significant amount of their short positions in corn. They covered 40,789 contracts of corn in the previous week, with bringing their net short positions now to 287,795. They were approaching a record short. Well, that was a significant short covering situation that we didn't see a huge upward move in price, but they did cover some of those short positions. Now, but on the other side with soybeans, they added to the short positions by 24,356 contracts, and currently they're at 151,030 short positions in soybeans, and that's nearing a record soybean short position. For the wheat, they reduced shorts in soft red winter wheat by 15,352, but they added shorts by 1,514 in the hard red winter wheat. So a lot of significant movement in the commitment of traders report, but we have yet to see a lot of real fund short covering that takes place that would really trigger traders buying into the futures positions.
And then, Robin, on the other side of the ag marketplace in the livestock complex, what news did we see there today?
Well, cattle traders, I think, just kind of backed off a little bit from their strength on Friday. We did see some more pressure on live cattle in the nearby months, not quite so much in the further months, but traders just seem to back off, from last week. Now, we did see the rally at the end of last week really wasn't supported by cash because trade in the south was steady, and trade in the northern dressed was down $2 from the previous week. So it really didn't provide a lot of support from that standpoint. Now, box beef has been showing some strength. They showed strength last week. They showed strength on the midday today with choice up $1.39 and select up $1.61. That seems to be carrying a little bit more of the support under the market rather than the cash market. Now, of the cattle that traded last week, the negotiated cash cattle, 21% of what was traded last week or purchased last week were for deferred delivery. So that puts the packers in a little better position again for this week. However, if box beef continues to increase like it has, they're probably going to have to step up to the plate. They've been slowing slaughter speed in order to improve their margins, and that's happened. But there is a point in time where they're going to have to continue to maybe continue the same slaughter speed or maybe increase a little bit because the demand is there. On the hog side of it, there we saw pretty significant pressure on the front month April, but after that, we just saw mixed trade. Now, China issued regulations. I term it as a quota system, basically to control their hog production. They're going to base it on pork consumption and production efficiency. Much like we see a lot of times in some of the dairy industry, we don't have a national quota, but there's plant quotas. Canada has a milk quota, so they regulate how much production. That's really what Canada or China is really looking at here in the hog situation. Now, that could be good or bad, based on demand. China's been a good buyer of pork. But if they're going to regulate some of they're not going to oversupply, so they're going to fill in the cracks. So I think it's a positive thing in the bigger picture. Now, there was higher cash this morning on the National Direct morning report. Sometimes on Monday, Packers aren't as aggressive. They want to see what the weekend retail demand was, but they came in a little more aggressive today. Cutouts were just down 18 cents, but after the big gain of $4.23 on Friday, that's not a big deal. Optimism is under that market. I mean, we've seen a significant rally in that, which brought the June contract up basically as to the level it was a year ago.
All right, Robin, lots of great information today for those of our listeners and our viewers who'd like to get in touch and learn more from the folks at agmarket.net. How can they do that?
They can give me a call if they'd like to. It's at 877-256-3253, or to get in touch with our general office. You can call the toll-free number, go to agmarket.net. The 844 number is there, and somebody will answer your call.
Thanks so much for the great analysis as always, Robin, and we look forward to catching up with you again soon.
All right. Thank you. It's always a pleasure.
That again was Robin Schmahl of agmarket.net. We'll take a look at how those numbers close. That's courtesy of the market window at iowaagnet.com. May corn up 5 1/4 at 4.30 even. May soybeans up 3 3/4 at 11.55 even. May soybean meal up 1.20 at 3.33.50. May soybean oil up a penny at 45.17. Chicago wheat up 6 1/4 at 5.64 even. Kansas City hard red wheat up 15 3/4 at 5.80 1/4. Minneapolis spring wheat up 15 3/4 at 6.59 1/2. May oats down 3 1/4 at 3.68 1/2. On the Merc, April live cattle down 177 at 186.67. March feeders down 142 at 251.55. April lean hogs down 180 at 86.27. April pork cutout down 50 at 93.50. And March class 3 milk down 6 cents at 16.71. And that's been a check of the markets here on Ag Matters PM. We're going to go ahead and take a quick break to hear from our sponsor, the Iowa Soybean Association and the Soy Checkoff. When we come back, I have the latest Iowa Ag News headlines. This is Ag Matters PM.
Iowa Soybean Association is driven to deliver for Iowa's 40,000 soybean farmers. We're proud to provide objective agronomic research, a helping hand with soil and water stewardship, and timely industry news powered by the Soybean Checkoff. Learn more at iasoybeans.com.
Welcome back to Ag Matters PM on the Iowa Agribusiness Radio Network. I'm Riley Smith. Time now to take a look at the latest Iowa Ag News headlines. Biden administration officials announced that they will miss a self-imposed deadline of March 1st to complete modifications to the GREET model for sustainable aviation fuels. The model is critically important for determining eligibility for the Inflation Reduction Act's 40B SAF tax credit. Renewable Fuels Association President and CEO Jeff Cooper said that while they were pleased to hear progress is being made on the modified GREET model, they're disappointed by this additional delay. In other news, more than 150,000 attendees from 190 countries were in Dubai, United Arab Emirates recently for Gulf Food, the world's largest annual food and beverage show. U.S. Meat Export Federation President and CEO Dan Halstrom provided insight on what he describes as the busiest Gulf Food show he's ever attended, with exceptionally large contingents from Africa, the Middle East, China, and Middle Asia.
Gulf Food 2024 in Dubai was yet again another, I think, record-breaking attendance. At least for the first 3 days, it looked like a much bigger attendance than any of the previous years I've been to. And a real, people think of it as kind of a Middle Eastern, African show, and it is, but it's really a global food show. Of course, the same old questions that we've had the last year or so about supply, and with the downturn in the availability of production due to the drought. But with that being said, I think there was a really big appreciation of the opportunity to look at different cuts. If they're used to middle meats, for example, maybe we could look more at the end cuts. If they're used to end cuts and can't get as many as they would like, why don't we look at beef variety meats? I think this sort of discussion was a theme and a real positive because, for the most part, the people in the trade understand what's going on with factors out of our control, and they're willing to work with us. So that was another real benefit of getting a lot of our members together with the trade in this venue to talk about these sorts of things.
Halstrom said the economic outlook for exports to the region depends on the country.
I think the economies, it really depends on the country. And you look at the GCC, for example. Saudi's doing quite well. The UAE is doing quite well, and there is maybe some momentum, economically there, despite all the headwinds throughout the region. But then you segue into some other areas like Jordan and Lebanon, and of course Egypt, which is right there in the epicenter of a lot of the activity with the Suez Canal and this sort of thing, and with the Gaza situation. It's a little more of a concern, I would say, and there's no doubt that those economies are under strain. So yeah, it'll be interesting to see how this turns out. But I would say it was a mixed message economically, depending on where you're at in the Middle East.
Halstrom also commented on the impact of constraints in shipping across the Red Sea.
The uncertainty around it. Obviously, right now, a lot of the trade is restricted through the Suez Canal, resulting in higher freight rates. diversion of vessels, that we're using the Red Sea now. A lot of them have to go around the Cape of Africa, which not only adds cost, but probably a bigger concern is adding time onto the route. And I think the theme was anywhere from 10 to 14 days increased transit time. So you're adding cost, and you're adding logistical time frame into it. But that's the immediate concern. The more long-term concern is the longer this goes on, the more that this could disrupt the overall vessel flow, which as everyone knows, it's a global flow. So even though you only have an issue in this one area of the world, it does have a tendency to be sort of a domino effect if it goes on for any length of time.
For more information, visit USMEF.org. And finally, the USDA says the number of U.S. farms has fallen under 2 million for the first time since before the Civil War. The numbers come from the 2022 Census of Agriculture. In 2022, there were 1,900,487 farms in the country, a 7% decline from the level in the 2017 census. Farm is defined as an establishment that produced or sold, or would have sold in normal conditions, at least $1,000 in agricultural production in a year. The latest census also reported that the total U.S. land and farms declined 2.2% to 880 million acres in 2022. This decline, when combined with the higher proportional decline in the number of farms, meant that the average farm size increased by 5% to 463 acres per farm. The Census of Agriculture, conducted every 5 years by USDA's National Agricultural Statistics Service, includes producer responses to questions about their farming operations. That's all the time we have for news headlines today. That also brings us to the end of this episode of Ag Matters PM. You can find all of our content on our website at iowaagnet.com. Also follow us on social media at Facebook, X, LinkedIn, and TikTok. Find our video content as well as previous episodes of AM PM on our YouTube channel. So make sure you subscribe and hit the notification bell to see when those videos go live. Don't forget as well our free Twice Daily Market podcast on Apple, Amazon, Google, Spotify, and Podbean. From the Iowa Agribusiness Radio Network studios in Des Moines, I'm Riley Smith. On behalf of Mark Magnuson, Dustin Huffman, and Andy Peterson, we thank you for watching. This has been Ag Matters PM.